Hi, everybody. I'm Steve Carver, and welcome to our webinar tonight. It's my presentation number 1130, and I want to welcome you to my journey through entrepreneurship. It's been going on about 65 years, and I appreciate you letting me join you on your journey, as most of you are just getting started. Let's say right up front, as I always do, I'm not a lawyer, I'm not a CPA, I'm just a fellow that's been in business a long time, but enjoy every day of it and more to come. Today I serve customers in probably 15 different states. Got a couple of orders, sold some parts. So I got a couple of orders for big ticket items and sold some parts and answered a lot of questions and sent out several quotations. So that's usually what my day is like, and then in the evenings I do the webinars. So I'm definitely into entrepreneurship, and more to come, hopefully. So thank you all. My first advice always when I'm helping people get started in business is get a second opinion and a third opinion. Get the best information you can from people who know what they're talking about and don't have a motive of their own. We're so fortunate in North Carolina to have the network of small business centers that are located throughout the community colleges. This series has been sponsored by the James Front Community College, located at Kenansville and in Warsaw. The director there is Joey Wynn, and she is a wonderful, wonderful lady that is dedicated to helping people get their businesses started any way she can, and is doing a fantastic job. She's one of the busiest women I know. But she's busy because y'all are calling her, making appointments, and letting her help you. These small business center directors are well versed in starting businesses, and they have a whole network of support and experts across the state that they can rely on. Letting the small business center director become one of your employees that you don't have to pay with expert advice, everything confidential. So if you're not taking advantage of the small business centers in your area, then you're shooting yourself in the foot. Let me tell you that if you don't know where the small business center is nearest you, just send me an email or write it over in the chat box about where your hometown that you're in and that you would like to get in touch with the small business center towards you. Tomorrow, I will send you the information you need to make that happen. Joy has a wonderful operation there, and if you want to get in touch with her, give her a call at 910-659-6008. Repeating, 910-659-6008. Give Joy a call and set up an appointment, or let her know that you'd like for her to come and see you at your business, and she'll do everything she can to help you along. Lynn Murphy is there as well. Lynn sends out communications for Joy and helps her with her appointments and helps me a lot with staying in touch with you guys. So we're looking forward to seeing Lynn as well. You will get a survey. Please fill it out, an email survey. Please take 60 seconds and fill it out. It'll go to Joy. Tell her what you think of the series, my presentations, my efforts for you. Any different topics that you would like heard, or ask any questions you'd like. But please take time to fill that survey out. It really helps her and helps the whole program when you do that. If you've been signed up before and we had your email address in advance, you've been sent an email with a lot of study guides, a lot of stuff that are listed there. And if you've been with us throughout the 7-part series, you're used to getting these. There are a couple here I want to mention especially, and that is there is a quiz there that I'd like for you to fill in the answers to it, and also add your name and mailing address. If you're qualifying for a certificate, we'll need that address indeed to know where to mail it to. Also, your homework assignments, requirements to earn certificates, and things we're talking about tonight are covered with your study guides. And there's a new one that is not there. That's why I got it in red. Several of you have asked me some questions about sales tax before tonight. I've got to ask my bookkeeper to do some research and give us some answers. I'll share those with you later tonight, but tomorrow I'll send you an email copy that covers the things we talk about tonight. So your study guides are very important. I want to say congratulations to all of you. This is our graduation night for a Academy 14-hour course. So those of you that have been with me all the way through it, it's been a pleasure to work with you and serve you. I feel like we've made some friends and just can't wait to maybe we can have a banquet one night and everybody get to shake hands and toast and break bread together. But thank you so much for your wonderful attendance. It's been the best attending group that I've had since I've been teaching. In 15 years I've been doing this. So y'all are indeed a special group to me, and I hope you've gotten to know each other better as we started. We've had over 92 people participate, and we're going to have at least 24 certificates to go out. I'll mention Mike Stutz, who is definitely going to be our first in class for just going above and above and on the extra mile, and just completed all the assignments, and yesterday sent me in a synopsis of all the assignments. And I'm so thankful for you, Mike, and for showing us the way and the leadership that you've shown to the other classmates. I hope that you will continue to join us on a regular basis through the years and share your experiences and tell folks what the class has meant to you. So we're going to have at least 12 that's completing the course. That is pending on your getting your quiz returned to me with your addresses. We got 6 people that are that may win the Extra Mile Awards, several Academy graduates that will advance in membership. So just a lot going on. We don't have a lot to keep Sarita busy. Sarita's with us tonight, and she's our senior member of the Academy at this point in time. So thank you all for your participation. It's just been a pleasure to work with you. Now, I will say to you right now, and we'll take it's like about a 2-week vacation from webinars, and on Tuesday, on the week of Tuesday, September the 10th, and Thursday, September the 12th, we'll crank up webinars on Tuesday and Thursday nights for 7 consecutive weeks. So and invite you to rejoin us. If you have missed some of our classes, this will be a chance to make it up. And if the making up the classes helps qualify you for a certificate or membership into the Academy, you bring that to my attention that you are doing some makeup courses, and then I can go back and confirm that you have finished them alone. Our objective is to help you in every way win these certificates, because as you do it, you'll certainly become more skilled and confident in yourself. But Tuesday nights and Thursday nights, really all the way, except at Christmas and New Year's week, all the way through April 30th of next year, I'll be online right here for you. And I hope that you'll join me just on a regular basis, and we can get to know each other and help each other and our other fellow Academy members as we go along. So, you know, the programs, the regular courses will be the same as you've just completed in this series, but every week, every time I'm updating every single week, just like tonight, I'm adding information about taxes and other items. So there'll always be some new information here for you. Now, we'll mention that our Tuesday night courses are going to be sponsored by Nash Community College, and our Thursday night courses be sponsored by Samson Community College in Clinton. So graduations, Mike, first in class, completed 100% of the homework, and then went the extra mile with videos and other things that he did. So happy and so proud of you, and thank you so much for this last video that he sent in after we had some chat last time. So y'all turn your volume up. Turn the volume up so you can hear Mike's presentation. Here you go.
Hey everyone, this is Mike Stutz with Affordable Handyman LLC. I'd like to share with you a special offer to help get your home ready for the holidays. Just use coupon code FALL 2024 during checkout and receive 25% off all handyman services between now and October 15th. Friendly craftsmanship with a personal touch. That's the Affordable Handyman difference.
You know, isn't that amazing what Mike has done? What Mike has done there is taken his video and tightened it up, dressed it up a little bit, and he added the look and hook features, which are giving people a reason to call right now. When you're doing a promotion, a special advertising promotion. Always remember to add look and hook. That is, make it look good and sound good so you can get people's attention, and then have a message in there that encourages them to call you right now and do some business. And so that discount like you're offering is a very effective way to make it work. Now we need to get that video out and show it to as many people as you possibly can. I suggest that you do it on Facebook and any other places that you can get it up and running, and advertise it with YouTube as well. So good luck with that. Keep us posted on your results, and you'll be able to tell if it's paying off or not. I also want to give a special shout out to the ladies at Finer Follies, the three partners that have been with us all along, and thank you for your work. And they're planning a big kickoff. That's Patricia, Marianne, and Gail, planning a big kickoff event in October. And so on the 26th, and I'm going to guarantee you that if there's any way I can come over from 10 to 6 on that Saturday, October 26th, I'll come meet you guys and see what you got going on. So thank you so much for being so active and aggressive and just making things happen. Communications, so proud of all of you. And they've got a really good promotion going on Facebook and Etsy right now. So check them out, and let's help them do some business. Again, it's a reminder here, if you are selling services or products this fall, you need to use the fall seasons as a theme. Let people know that you're alive and well. And if you want the business in September and October, you need to be promoting it now to get people interested in getting your plans together. So when the actual sales season comes along, you'll have your marketing stuff in place and ready to turn it loose. So that's just a reminder. It is a good time for me to say to you that this season in the fall, as we move into the fall courses that we mentioned earlier, I will be promoting different things that you might be able to do for the Thanksgiving and Christmas season's promotion, to give you ideas, just like we've done here for the fall season. So moving along now, let's do that words of the week. I certainly enjoy doing it, and from the notes that I get from all of you, I know that y'all enjoy them too. So get your chat buttons ready to type in. You know what I'm going to ask you. We're going to ask you what the words were, the 7 words that we've got to work with for this week. And if you want to just go ahead and start typing the ones that you know of or remember, I'll be going through the slides with you. So here we go. In week 1, we used be fat, F-A-T, because every time I look down, I remember just how fat my belly's getting. But I wanted to tie some words to remember in being fat, and that is be faithful, be available, and be teachable. If we can say to ourselves to remember that if we're going to learn and improve and grow and expand and take in any information, first of all, we have to be faithful to ourselves, other people, make ourselves available for learning, and make ourselves available to our customers. And always remember that we don't know it all. No one knows it all. And if we remain teachable, maybe some new information can slip in that we can put to good work. The second week started with the letter C. Thank you. Hey, got a bunch of people typing away. Thank you so much. What was that letter C for the second work? It was committed. And committed. And if y'all will type that in, it will help you remember and prod you along to use these words in your vocabulary every day. But let's be committed and be dedicated, loyal, and faithful, and devoted, and anchored, and pledged to keeping our businesses running and to do it on the high road, keeping our sights high and doing work the right way. Commitment is so important. Instead of being lackadaisical, an entrepreneur will have a hard time moving a new business forward unless you stay committed to it. I am so thankful for the commitment that so many of you are making, and I can see it by your regular attendance here. I know that all of us have got other things we could be doing, but y'all are committed to it, and stay committed. And I'll keep encouraging you if you feel like you're getting just a little bit uncommitted. You sign on with me on a Tuesday or Thursday night, and I'll try to remind us of what we're supposed to be doing, because I need that help myself. Third week starts with the letter L. Y'all are really typing in well over there. Everybody look at your chat boards and join in with us. Number 3, the third week, letter L, we talked about listen, and reminding us now, this was about listening to ourselves. Listening to ourselves. As I do these videos for you, and then I listen to myself talk the next day, I can see where I make so many mistakes, and it's so disheartening from time to time. But indeed, by listening, hopefully I'm going to get better at it, and we'll do a better job. What our goal is as new business people is not to try to sell everything in the world, to have great big profits and all. Of course, that's important. But the most important foundation to the sustainability of our business is the ability to build relationships, so that we can have customers that feel like, hey, I'm a part of this business and I don't keep coming back to it because I got an interest in seeing it move forward and do like that. But we have to listen to our presentations. Doing videos like Mike has done, there's no better way to see and hear yourself than doing these videos. So let me encourage you to get on your telephone and start making some introduction videos. Share them with me. That's one of your homework assignments. And you'll really start improving in your self-confidence the minute you do it. Fourth week, we started out with the letter I. And that word was what? Who knows what that one was, the letter I? Yeah, here we go. It is invest. Invest. But you know, I'm not talking about putting your money in the bank. That's not the kind of investment I'm talking about. I'm talking about investing in yourself. Being willing to invest in yourself and take the time to enhance all your skills, to become better at what you do, have better product knowledge, and just do the things that it takes to help you invest in yourself. And there's lots and lots of different ways to do that we've shared along the way. Fifth week, the letter was G. And that's a sweet word. The letter was G because it's grace. Grace is so important to folks in their interactions with other people, in your relationships, and your ability to start relationships. As a business owner, as new customers look at you and talk with you, did you know that in just a few seconds, you and I both, in just a few seconds, start sizing people up? We start making those first impressions. And if you come across as pleasing in appearance or the effect that you bring to the room, or if your mood is that of being someone that is considerate and thoughtful, and if indeed you do your best to have attractive traits and charisma, let me tell you, that's called graciousness, and being sweet, being nice, being kind to other people so that they feel comfortable when they're in your presence is such a great attribute for you. And for a business person, it just can mean the world to you. You know, being energetic, having a lot of charisma, ability to be a good public speaker, all those things are important, but they're not as important as having grace. You know, and I know, if you think about it a few minutes, only probably a few people, probably less than 10 that we meet in a lifetime, that we can always remember as a wonderfully graceful, gracious person. We might even say angelic about some of our favorite people that we've known through the years. I want you to be one of those. Let's all strive to be remembered as a person that was gracious. Next week, the word was C. It started with the letter C, and that letter was courageous, for courage. Yes, thank you all for typing that in there, courage. What a great word. It's so important, and I appreciate y'all's comment on the emails that I sent out last week. We need to find the courage to lead with conviction. Most anyone can lead, but leading with conviction takes it to that next level. And if we take all the other 6 words or 5 words that we talked about before this, pack them into a nice, beautiful package and wrap it up, and then have the courage to show ourselves with these attributes to the world as a business person that's doing the best you can to lead with conviction, to lead the right way, to be a lot more like, or a lot less like ourselves and a lot more like Jesus, we might say. And that is, try to do it just right, remaining true to yourself and to your convictions. That's what the Academy stands for, and that's what I want you to be a part of. This week, letter 7, week 7, the last one kind of ties it all together into kindness. You know, a lot of you might say that that Steve, these words don't sound like business words. It's not accounting. It's not taxes. It's not marketing. What is it? What it is building relationships and being able to have the endurance to see it through. If we take our 7 words here and put them to work in our lives, in our daily lives, in conversations with other people, and mix it up with the word kindness, by golly, you can't be stopped. Because what you're doing is you're loaning, when you're kind to someone, you're loaning your strength to instead of reminding them of their weakness. If your words, if your presentation, if the things you're saying and doing is reminding people of your strength and helping them take a part of it, then they're not they won't be concerned about their weaknesses or inabilities. And this it's hard to come up with just the right words, but I'm sure y'all can do it just as good as I can. But the meaning is so clear. Be kind, treat other people as if you would want to be treated, and keep working at it and getting better at it, and indeed you'll be so proud of yourself. So the words of the week are all listed right there. Faithful, available, teachable, committed, listening, investing, grace, courage and to lead with conviction, and being full of kindness and loaning your strength to other people instead of reminding them of their weaknesses in every way. So let's all try to go in that direction and keep each other in our prayers to have strength in making that happen. It's been a real pleasure working with y'all on this, and thank you all for working out on that chat board and trying to remember this. My job is to motivate. I try to do that. Your job is to find the endurance. And wow, this group has found the endurance, at least for the last 7 weeks, most of you, to stay in the game, because that is the key to becoming successful in small business, is staying in the game long enough to get used to taking the hits, to get used to getting up and still feel good about it, to learn the little things that help you make a little bit more profit and still remain competitive. That's what endurance will do for you. And so keep trying. I'm pulling for you. And I want you to remember that endurance I'm talking about is at your pace. Do things at your pace, no one else's. I want you to feel comfortable as you're going through with something, and don't feel like that you're on thin ice. But that'll be the main thing. Today I had a fellow to make a very serious business offer to me, and we discussed a lot of parts of the different puzzle to make the proposition come together. But I sensed that he was not comfortable and uneasy, and felt like there wasn't a quite amount of trust in the information that was being given to him. And I felt compelled to say, let's just wait, back up. You wait till you get your ducks in order so that you can feel really good about where you're going, so you can enter this without anxiety and feeling like there's just too many risks involved, but you're going to do it anyway. That is not the beginning of any good business deal. So listen to what other people are saying, sound them out, and make sure that as you're doing deals, that you're looking for win-win situations that have a good chance to last a long time. That would be a good example of keeping the endurance to stay in the game. Tonight we're going to talk about record keeping, depreciation, taxes, and some secrets to help you do some selling. It'll be a wide-ranging discussion full of information. So remember, you can look at your video tomorrow. You can stop these slides anywhere you want to on your own computer or phone, and take additional notes if you want to, or save it for a day that something comes up you want to refer back to us. First, let's talk about record keeping. Every business has to keep records. The tax laws require you to keep record, and the general business laws require you to keep records. So it's not an option, really. If you're taking money from other people and collecting tax money, then there's a legality issue involved here. Record keeping, I could simply say, well, you just need to get your computer and you can save everything on the computer and you won't have any paperwork to worry about. Remember, that's what they said a long time ago when computers first started being promoted. Well, we've all learned that computers have actually doubled and tripled the amount of paperwork that's produced with things we have to copy, and as much information as we can share, the paperwork just keeps on coming. So there's two kinds of record keeping you need to be familiar with. One is how to save computer information in the cloud, on your disk drives, on your thumb drives. There's a lot of ways to save electronic information. If your business is up and running, I can tell you that you can go on the internet and find lots of companies that will electronically save your information as many times each day as you want it saved and give it back to you whenever you want it. That's kind of hard to swallow when half the news we hear today is about being hacked and this and that and the other. It's kind of hard for someone to hack your information in a file cabinet. I'll just keep that in mind. So the other side is, what do we do with all the paperwork and important documents? Some of those we have to keep forever. I mean, like forever and ever and ever. A lot we have to keep for 7 years. Some we don't have to keep at all. But I want to say to you, have a place to keep your records that is dry and secure, and there's not water around it. That means water pipes and such as that. It's good to have electricity in the room. So if you're using a storage place at home, a closet, or a building, or you're renting a space somewhere to keep your record storages, I want to tell you, always keep in mind, try to keep it up high. Don't rent a place that you think is prone to be flooded. Very seldom is somebody stealing old business records, but you still want to keep a lock on the door, and you want to have a light inside when you need to get there. You want it convenient to you so you can get to it in case of a storm or a tragedy. You want to remember that some of these things have to be kept forever, and those that need to be kept forever, you might probably want to keep those in a safety deposit box at a bank, depending on what they are and how important they are to you. Because when you put stuff in the safety deposit box, you can pretty much forget it, and it's usually safe. Articles of incorporation or your LLC agreements, certain audit reports, copyrights or patents that you've worked hard or paid for to get, stock certificates for your different businesses or your partners or co-owners, any deeds or mortgages or titles, like for trailers or cars or trucks or different types of equipment. You might want to keep those in a safety deposit box, or at least in a secure place that you know exactly where it is and that you can tell other people where they are in case you become disabled or someone else needs to help you with it. On your screen, you'll see other items that you want to keep permanently. Your year-end balances from your accountant and your year-end tax records. I've kept those all through the years. You don't have to keep those, but 7 years. But I'd like to keep those tax records and financial papers for a long time. Now, if you've been in business for 65 years, as I have, that adds up to a lot of paperwork. And I can take my camera and pan around this room here and show you filing cabinets and boxes in this room that are full. So it does add up being a lot of paper over a long time. But for now, get you at least 2 4-drawer filing cabinets, and that'll help get you started in your paperwork, keeping it up with it. But let's talk about the items that you want to keep for 7 years. This is the normal stuff. And that would be your bank statements and your shipping notices to folks here and there, cash book records, check records, personal records of employees. You want to keep those. You want to keep your expense reports and things like that. Inventory records, sales tax returns are very important to keep those for at least 7 years. Your payroll records, your cancel checks, things like that. Now, I'm saying 7 years because that's basically the law as I understand it. But I personally keep my records for 8 years. And the reason I do it for 8 years is because every year as you're in business, at the end of the year, as you finished your tax work and you got everything back, and you got it boxed up, and you're ready to put your records away, you tape it up and you slide it into that special place where you hope you don't ever have to touch it again. And then here comes some more mail in, or you'll get something else in handed to you that you say, oh, this should have gone in that box too. By God, this should have gone in that box. But none of us are going to undo and untape all of our boxes to stick it in there. What we're going to do is just put it in this year's box. And we say to ourselves, if I need it, I'll dig it out. So that's why I keep mine for 8 years, because I do a lot of that, sticking it in. Also, I want to give you this little piece of advice that'll help you. When you are at the end of 8 years, when you're getting ready to throw away your old records, and I do hope that all of you have a great business, that you've got a lot of records for the next 8 years. But when you get ready to discard some of your old records, you just don't want to pick the box up and throw it away. No, I suggest that you actually open it up, go through there, and every time you'll find something that you say, well, maybe I don't have to keep this, but something in my gut saying I ought to keep this particular thing. And you'll take it out and then put it over in your permanent files. I do it every year. So just remember to take that regard. A lot of folks will also tell you that as you're throwing those records away, it's an excellent idea to have them shredded or get you a burn barrel and burn them and get rid of them if you decide to do that. I do suggest that you do purge your files because they will tend to build up, and anything in there that you decided you didn't need to keep can't be used against you somewhere down the road by anybody. So keep a good clean house with your records. It'll save you time and energy down the road. A little footnote is that here in North Carolina, as we're reminded every fall in March, we are a place where tornadoes come through and hurricanes come through, and after hurricanes and rainstorms, floods come back. So we are in an area that is prone to have disasters. And when we do have a disaster in your neighborhood or mine, FEMA, the government organization, comes around and sometimes offers individuals and small businesses grants and or very low interest loans to help get through or get over a disaster. You'll be able to talk to these people, but when you do, they're going to want to see your records. So just remember to have those records stored somewhere that you can get them even after a flood or a hurricane. Keep that in mind, a place that will be easily accessible if you can. Now, a little thing, we're going to talk about taxes a little bit later on. When you're talking with these FEMA folks and you're asking them for help and in the terms of reimbursing you for profits that you lost because you couldn't operate during the flood or during the hurricane disaster, they're going to say to you, well, prove to me what profits that you lost. And the way you would do that was to pull out last year's records and say, well, from this point in time to this point in time last year, I made X amount of money. And that's how much I appreciate y'all helping me get reimbursed for. So if while you were doing your taxes, you didn't show any profits, then you're not going to have anything to show them, because they're not interested in how much business you did. They're interested in how much profit that you made. So keep in mind that if you do your taxes in such a way as to show no profits at all, then indeed you're not going to get along really well with a FEMA investigator or a bank loan officer. That's the other side of it. The rest of this story is we're going to talk about depreciation tonight. And indeed, you maybe didn't have any exposable taxable income, but if you use your depreciation in the right way, maybe you can document to these type of folks that indeed you were making money and you do qualify for some reimbursement. So sometimes depreciation can really help you out in that situation. So that's what we're going to talk about now. Let me get a drink of water. We do appreciate you, and we appreciate that. And we have appreciation. And appreciation is when things increase in value. And then we have depreciation, which is the model of things decreasing in value. And if we buy something that is an asset in our company, we don't put that into our books as we spent money and we bought an asset of a certain value. And we'd like some tax help about that. And the way you get that tax help is through depreciation. That's what I'll be talking about now, okay? Depreciation. Understanding depreciation might take you to a college course where you spend 4 years learning all about it and all the ins and outs about it, because it can get really complicated. If you want to see how proud a CPA can be of themselves, get them to tell you about all the different types of depreciation and how it can affect you in a lot of ways, and they can talk to you for a week. We don't have that time, and we don't need to know that stuff, because that's why we would have a CPA to help us. But fortunately, I was able to find a few paragraphs written by an expert on depreciation. And Lisa Borga put it on the internet back in 2021, and I have copied it and shared it with you, and I give her every bit of credit for it, because it is a fabulous short study on depreciation. It is one of your handouts, and I encourage you to, at your convenience, to read those couple of pages, and it will give you really good insight to how depreciation works. Why do you want to know this? Because it can make a major difference in how you set your books up, how you handle your assets, whether or not you buy or sell different things. So very important. But the short class is, the quick notes will tell us that depreciation is simply a reduction in the value of assets as time passes by. Because anything is going to that we're using is going to have a depreciation because of wear and tear, if nothing else. So these are assets such as machinery, furniture, computers, hard items, vehicles. So instead of staying at the same value, things generally depreciate. Now, there are a few exceptions, but I really don't know of none that I can mention to you right now in business, other than that if you're talking about some type of real estate. And I'm not going to get into real estate at all. We're talking about other things. So companies can use that depreciation, though, to spread the cost and the values of it over 5, 10, 7 years and use it as a tax advantage. And that's why it's in our discussion tonight. So we'll talk about that a little further. Let me show you how it works. Depreciation and assets, they go together. Let's say your company has $10,000 in the bank, and it has a net worth of $10,000. Okay, so your company has a net worth of $10,000. If you're in the antiques business or the novelties business, like Follies, then indeed they would need to look at their inventory and determine what the value of it is if the company owns this inventory, and that would be the value of their business would be, that asset would be a value of their business. But we're going to use the term really simple now at $10,000. So you got $10,000 in the bank, but you need to buy some equipment. You've got a job to do at your company, and you decide to purchase a piece of equipment. I'm using an example, an industrial saw, for $5,000. You'll take half your money and spend it on one asset, a saw. And so my question to you is, when you spend half of your money, does that mean that half of your value of your business goes down? Is it cut by 50%? And the answer is no. Because on the day you bought that saw and it was worth $5,000, you had a $5,000 saw plus $5,000 cash, $10,000, really no change. But on day two, things start changing, because as that saw gets older, really whether you use it or not, it's not new anymore, and it starts dropping down in value. And you want to face that fact because it is the truth. But let's talk about this. When you bought the saw, it's real, it's tangible, it's hard, it's heavy duty, it's something you don't keep a while, it's something that you can prove that it's here and you can show to a tax examiner. It is a hard asset. And hard assets indeed are tangible items. not non-tangible, tangible items that are hard assets, and they become capitalized assets. That is, you put your capital into it, you put your cash into it, and it's still there as an asset. So as long as you can hang that there at $5,000, your company is still worth $10,000. But now the rest of the story is that hard asset goes into your depreciated items list on your depreciation sheet. A depreciation sheet is a part of your financial statement and your tax return. And those values that you put on the different assets are called book values. Now, that's the first time I've used the term book value. Everybody say it with me, book value. Is the book value the same thing? Is the book value the same thing as other values? They are not. We'll talk about that some later on. The book value is what the assets cost you when you bought them and how much value is left on them as they're depreciated. Most folks would take a 5-year depreciation on most assets. The Congress and legal eagles sometimes give you lots of other options on how long you can depreciate items or how much you can take. But if you're using a 5-year depreciation or write-off, hey, there's a word I hadn't used before, but you don't hear it a lot, write-off. The write-off value of that is, or the depreciation write-off value over 5 years, if it's worth $5,000, is $1,000 a year. So on your books the first year, it's at $5,000, but what's it worth to you on your books the second year? $4,000. The third year, $3,000, and all the way down to zero. And indeed, the book values will depreciate all the way down to zero, and whether or not you keep that item on your depreciation list is kind of up to you. Most people will want to keep their assets on their books because the fair market value, first time I've used that term, is altogether different than the book value, and you want to always have advantage of fair market values when you can. So what's all this got to do with taxes? So far, nothing. It's just that we don't have to devalue these assets because they're just getting older, and we have to put that depreciation value in there. Well, depreciation indeed is a tax deduction. It is a write-off. So indeed, that accounting feature of devaluating our assets over the period of time now is becoming a tax write-off advantage. And for each year, we're able to reduce our taxable income exposure by $1,000 as we take those units off. So if indeed we leave it on there and it stays with us for the whole 5-year period, during the next 5 years, you will be received a $5,000 tax exposure reduction. Now, I did not say you have received a $5,000 tax deduction. No, you receive an advantage because your exposed income is reduced by the $5,000. Let's look at that now. So, and I'll come back to it hard in a minute. So, remembering though that the two concepts of your deductions are business expenses, regular business expenses, and capital expenses. The regular business expenses or regular write-offs are disposable items, things that are no longer here, non-tangible. The capital expenses are items that are hard assets, and you've still got them here improving it, and they become a part of the net worth of your business, of the book value. All right, we'll talk about taxes a little bit now. We'll come back to all that. First of all, when I talk to any CPA about what is the best advice that I should offer a new entrepreneur getting into business, what's the first thing that I should say? And almost like they have rehearsed this in college or somewhere, the answer is basically always the same. Steve, encourage your new entrepreneurs that as they get their businesses started and start collecting tax money, to have it in their mind right up front, hardcore, this tax money does not belong to me, and I'm going to have to give it to the government on a certain date. So I don't need to get attached to tax money. Instead, pigeonhole your tax money, put it in on your chart of accounts, keep up with it separately, and make sure that that money can always be covered by your checking account or wherever you keep your reserves. That money is not yours and will have to fly out of here. Because I will assure you that sometimes as your business really is doing great and you're bringing in a lot of money and you're taking in tax money and sales, you'll have that tax money over there in your main checking account and just going big guns with your business. And you say, hey, man, look at all this money I've got in here. I can pay off some bills. I'll take some early discounts. I'll do this and I'll do that while I got this money. Or I think I'll go on a cruise or go down to Myrtle Beach for a couple of weekends. I got more money than I know what to do with here. And then you come back one morning and you realize you need to send out a large tax payment to the government. And you don't have it. You spent it. So what in the world would you do? You've only got a couple of choices. One, go borrow the money. Or two, sell something at a ridiculously low cost so you can come up with the cash, because you have to come up with the cash to pay your taxes. There's no option. And if you're late, you pay a penalty. If you don't pay it, you pay a penalty and a fine. So what is the easier method? No matter what else you got going on, when you collect money that's got taxes in it, set it aside. When you have payroll taxes that have to be paid on behalf of your employees, put that money aside. Don't just think you can make the payroll and pay them what you owe them. When you do that, you must find that extra money to cover the different payroll type taxes and deductions that they have entrusted you to look after for them. This is really serious. So pigeonhole tax money and keep up with it very, very forcefully. All right, the business expenses, the general write-offs, the everyday write-offs are for those items that are non-tangibles, that are no longer here, that are used up in the trade of business. Things like the rent that you might pay, it's gone. Travel monies that you might pay, they're gone. Paying employees, salaries, once you take that money out of your company, it's gone. It's not an asset anymore. It's not a cash on hand asset. These are all 100 deductible expenses. For every dollar you spend with these types of deductions, those are dollars that directly come off of your taxable income. They're dollars that directly come off your profit. So just remember that. You're lowering your profit with these expenses. Capital expenses, on the other hand, and usually always last a year or more, and most of the time even longer than that. And they can be even things like improvements that you make to your building or your property, leasehold expenses, new roofs, remodeling type things, and new vehicles or trailers, things that are here now and will be here a while. And it can get really complicated with the CPA when you consider amortization and depletion, and that is when you have borrowed money to make these, to pay for these items. Even that money that you've borrowed can become a deduction for you as long as you got it in the books properly. So it can get quite complicated, but I want you to understand that capital expenses directly affect your book value, which may directly affect your fair market value and also your taxable income. Let's say that you bought a $250 printer like I've got right here. And if you were a big insurance company that bought lots of printers for all your agencies to carry all over the country, that $250 printer would not be chicken feed for you, and you would not have any interest at all in capitalizing that expense or putting it on your books as an asset and keeping up with it for years. But me, on the other hand, with my little company, I only have 2 printers, and I'll take that printer, and it'll last me 10 years. So I will even take an expense as low as $250 and capitalize it, put it on my books. Why? Because I need to show some value to my business, some book value somewhere, and that's an easy way to do it. and help me with my taxes as well. Now, if I bought a $2,500 printer or a $5,000 printer, most everyone would take that serial number down, save it, even big companies, and capitalize it for the same reasons. But the paper, the printer paper that I buy all the time, or with the printer, would that be a capital expense? No. That's a general business expense because it's here one day and gone the next. It's a usable, disposable item. Kind of like with a set of tires. On my trucks, with my companies, a $2,000 set of tires was a big expense, and they would last me for 10 years or more usually, at least 5. And so I would depreciate them. It would give me a little tax advantage there. But if I was a big trucking company, no, it'd be just a general expense, and I'd write it off. A new engine for a truck or a tractor, 17 grand. Yeah, in my business, I'd depreciate that. But in a lot of other businesses, they would not if it's small potatoes. So I'm making the point here that every business will handle these issues different. And it's one of the powers and authorities that you will have as you run your business to place these as you wish to best advantage your business. Rental, again, though, rental is a write-off. It's intangible. It's gone. Once you rent something for a month or a year, you don't have anything to show for an asset, so anything rentals is always gone. Same thing for payrolls. Same things for payrolls or salaries that you pay someone else, any type of fees. And well, let's talk about shop tools. Shop tools are in a box. They're there, right? And if you had a $4,000 set of tools, yeah, let's depreciate that. Let's hold on to it, show value. But most of us aren't going to go out and buy a $4,000 set of tools. But almost all of us are always, if we're in business that uses tools, buying $100 here, $30 there, and over the course of the year, may indeed buy several $100s worth or thousands of dollars worth of tools. Now, I suggest to you that you keep up with all those records so you can remember and add up and what the value of these tools that you bought are, and each year add in a set of tools for whatever that value is. Make sure you got them in a box so you can point to them and show someone they're real. But even though you were buying tools a little bit along, I suggest that you keep up with those records on any things like that that you can combine and make into an asset. Good way to have some depreciation too. Let's say you were renting a forklift for $1,000 a month. And I used to do this all the time. That was a major part of my business at Carver Equipment. We had literally hundreds of forklifts through the years that we had out with customers on rent-to-own plans, and they paid $300 to $1,000 a month to have those. But could they write off that money? Yeah, they could write it off. But could they call it a capital investment or depreciation? No, it's a write-off. Even the money it took to deliver them was not had to be written off too as a regular business expense. But let's say that someone had rented a forklift for 24 months. I would generally give them a really good rent-to-own plan so that at the end of 24 months they'd have the option to buy the machine for $5 grand. Yeah. So would they be able to do that? And a lot of people did. They'd write a check for $5,000. So that $5,000 represented the purchase, and that was depreciable. That was buying an asset for $5,000, and it would go over onto their depreciation list or into the books as a $5,000 asset. Now, here's where I make the point. The difference in fair market value and book value is easily exampled right here. The book value on that forklift would be $5,000, but the market value, current market value on that unit would be around $20,000. So it's important that we don't confuse the two, because in just with that one example, you can see how large fair market value can be above book value. In some situations, it may be that the book value is indeed a whole lot more than the fair market value. You just don't ever know for sure but you always have to know the difference and how it will affect you. So let's talk about doing taxes. We're all basically just over that tax season. However, some of us have our taxes in at different times of the year, but it's still always wise to see what we can remember. What are the basic rules that I want you to remember for new business owners as you're getting started? I suggest that you find an experienced bookkeeper that can prove they've been keeping up with their continuing education, have current credentials, and have a good understanding of your business. And the same thing goes with a CPA. CPAs, you can pretty much have a little bit more ease of conscience with it, because just to become a CPA instead of just a regular accountant, they had to go through some really tough tests and spend some time doing accreditation work or apprenticeship work for a long-term CPA before they could qualify to get their license. So CPAs are going to be very important to you. I suggest to you that the CPAs look over the bookkeeper's shoulders and report to you different things. The bookkeepers are, as we said last week, interested in the daily, weekly, and monthly records for your business. The CPAs are looking at the long-term, yearly, and several years long-term interest of your business. I really prefer that my CPAs and my bookkeepers not be too close together. Sometimes you're going to have the same firm that do both, and maybe that's okay. But you want that CPA reporting to you on how good the bookkeeper is doing for you, because they're going to know right offhand how qualified that bookkeeper's work and if it's working out okay. There's two words now we're going to talk about: avoidance and evasion. Tax avoidance and tax evasion. Very few presenters will approach this subject, but I know how important it is to you. Tax avoidance is a good thing for you. Done legally, tax avoidance can save you tons and tons of tax money and therefore help you end up having more money for yourself. Tax evasion, there is no legal term for it. I mean, there is no legal way to evade taxes. It is illegal. Tax evasion is about lying, cheating, and misrepresenting. When you're running your books, as we're talking about taking advantage of the deductions that we just talked about earlier, maybe you'll rent something so you can get more tax advantage than another. Maybe you're ready to put something on your books a certain way to improve your tax situation. All that's just fine, as long as you're not lying and staying within the riverbank, staying within the boundaries of the laws on that. And we can't know that as individuals out here trying to run our business. That's why we have CPAs. That's why we have bookkeepers. And indeed, someday you're going to need to call on them for advice as your business grows and you have these questions to face. Now, folks like me can talk to you all day and share with you our experiences, but as I said to you up front, they are trained and they keep up with the current regulations about taxes and such as this, and I don't, and you don't. So you want to be getting your advice from someone who has the current information. So I'm always encouraging people. Yeah, I can tell you what my experience is, but you really need to come up with what the CPA has to say to you. The hot buttons that we're going to want to remember are: how can you manage your deductions? And usually the hot questions that people ask me are: how much deduction can I get for my home office? How much deduction can I get for travel, business use of the car, interest, rental expenses, taxes, insurance, training and aid, and clothes and uniforms? All these are not capital items. All these are direct deduction write-offs. So it's important because these expenses, when subtracted from your income, will lower your tax exposure. Let's talk about a little bit in depth on these. Home office deductions are very important and very helpful for you. How do you determine your home office deduction? A couple of ways. One, if you're operating out of a space inside your home, you would add up what that space is, compare it to your total space in the house, and create your deduction. For example, let's say you're living in a 1,000 square foot apartment, and you're using up 100 square feet in your little office area. So that's 10% for your office. So you would take your home, your apartment expenses, your rent or your payment. You would take any maintenance that you have to do, cleaning, electricity, utilities, all the expenses for your house, add it up and see what 10% of it is, and then you could take that as a home office deduction, 10%. Okay? Now you'll want to document that with your square footages and your reasoning, keep up with that paperwork. Some people get real greedy here and they say, well, my apartment's just, the living room is half of my apartment size, so I just take 50%. Well, if you get audited, you don't have to explain and justify that. So that can get a little tough. So I suggest you stay pretty close to the rules. One way that I've worked through the years and has suggested people do it if they can, if you can have a detached building or a detached garage or an outside building that you can call and name and use as your office, then you can take that individual building and call it a rental property. And then you can rent your rental property to your company for whatever you decide you want to do it within reason. I'm sitting in an office here that I've used for almost 20 years as my office, and I've rented it to my company for all that time for $625 a month. The company pays me that much a month. I get that income. So the company takes a rental deduction on that, but I have to add that as my personal income and pay taxes on that $625. But for me, that seems to be a whole lot better way than doing the square footage thing. Because if I'm renting it, part of my rental agreement is that the company pays for all the other items that have to be done. Repairs, lawn mowing, painting, this and that. So you've got a good way there to have some gray area to give you an advantage or two. Something to think about. But if you do rent your outside building to yourself, you need to do a rental document, a lease document, have it all written up and spelled out what the rent is and the terms, and have that piece of paper on file pretty much whenever you need to show it to anyone. Travel, meals, and entertainment used to be easy peasy. Pretty much anything went. Today it's different. You need to document whatever you're deducting, a date, which customer you were with, where you were, and such as that. It's still got a lot of flexibility in that for trips that you're taking out of town for training or business meetings out of town, but they're going to need to be documented. I used to do a lot of boating and a lot of fishing, and someone once told me, Steve, buy a bigger boat so you can write it off it because you take your customers fishing on it. Used to, maybe people got by with that, but in today's world, very seldom. Before you make a major expense of a travel home or a boat or a property outside of town, a summer home at the beach or the lake or the mountains, so customers can use it. Indeed, you want to talk real seriously with an accountant and make sure you got your ducks lined up in a row before you go down a real treacherous, slippery slope there. Use of your car, really important way that a lot of us would do things. So if you're using your vehicle in your business, as most of us would, you keep up with those business miles. You keep up with those business miles and you can be reimbursed a right good chunk of change per mile. I forgot exactly, someone told me recently how much per mile it was. It would seem like it was maybe 70-some cents per mile that you could be reimbursed. If anyone that knows for sure what the federal mileage reimbursement is now, how about typing it over there in the chat board for us? And I see several bookkeepers and accountants on board with us tonight. Maybe we can get that answer real quick. So most of the time, using the deduction that's available to you now, if you do a lot of traveling in your vehicle, you can take that deduction, be reimbursed by your company, and make your payments, do your maintenance, and maintain a pretty darn good late model used car. Notice I said late model used car. 67 cents per mile is the deduction. So if indeed you drive your car 100 miles, your company gets to reimburse you $67 every 100 miles. And that can add up to a lot of money for you. Now, if you're doing this, this means you pay all the bills related to your car, and the company only pays you that mileage. If indeed you want your company to own the vehicle, excuse me, you get to use that company vehicle for your travel. Excuse me. You get to use that company vehicle for your travel, for your business. And the company pays for everything. Insurance, tires, oil changes, car washes, the whole deal. But, however, when you're doing that, you'll be required to fill out another form where you state how many miles you use that company vehicle for your personal travel. And then things are reversed. You'll need to reimburse the company approximately 67 cents a mile for your personal travel. So a lot of us say, oh, well, that's just a matter of paperwork, and I just write that down. But you will need to be keeping logs, documenting when and where you were going on that company vehicle all the time. And if you only have one vehicle to your name or to your family, it's really hard to fudge on that, because everyone's got X number of personal miles they have to use, and you'll need to record it. If you've got a second vehicle, though, you can say that you're using that second vehicle for your personal travel, and your company vehicle stays still. That's up to you the way you keep your records, but that does give you a little bit more flexibility. Rent's 100% deductible. Insurances are. Business-related training is related. Now, let's talk about clothing and uniforms. If you own an automobile shop, you're a mechanic or a lawn mowing company and such as that, whether it's just you or whether you have employees or other items, companies provide uniforms for employees and owners everywhere all the time. And that's a direct write-off. If, however, you're not in a business that uses uniforms like me, I speak and I give speeches and talk, but still, I use my clothes in my business, and every year I will indeed take a uniform and clothes deductions. Usually I'll go to a place like Belts or somewhere a couple of times a year and buy several shirts, pants, sport coats, and such as that. Save that receipt so I can document it as these were the work clothes that I bought. And I've been writing those off for years without any problem. Don't overdo it. Don't push the limit on this. But indeed, you can get some good tax deductions. Just a matter of keeping your records like that. A red flag issue is one that you've got a practice or a behavior that's maybe really increasing your chances for an audit or for people asking questions. So let's just talk about, in general, things that you want to be very much aware of. First note I want to tell you is when you're ready to get your taxes done by the professional, a lot of folks have just put all their records, just gather them all up, all these little pieces of paper into a big paper bag or folder, carry them and hand them to the bookkeeper, the accountant, or the tax person, and say, okay, here it is. Well, I want to tell you that an accountant is accountable for everything you hand them. So the more pieces of paper that you hand to them, the bigger your bill is going to be, because you're going to be on the clock. And they're going to charge you by the clock. So any work that you can do to assemble and summarize different types of expenses, narrow it down to one or two sheets of paper where you've summarized your utilities or your car expenses or uniforms or all the different categories of deductions, if you can summarize them and write them down and just hand your bookkeeper or accountant or tax preparer a fewer number of papers, the better your chances are of getting a smaller bill. The more paperwork, the larger the bill. But if you do your own organizing, it'll save you a lot of time, and you'll get an additional gift out of this. And that is the gift of seeing these different things and how they come together if you're doing it yourself and have an understanding of just how much money am I paying for the internet. Or, wow, this vehicle is costing me a whole lot more than that vehicle. You get a real insight to your cash flow and where it's going when you summarize your paperwork. Taxes are collected in a lot of different ways. I like to think that basically whether you're calling it an estimate or a fee or a license or a permit, it's all taxes to me. And basically 4 different groups are collecting tax money from us. 4 different groups. That would be folks at City Hall, that would be your town clerk. That would be folks for your county, that would be your county tax collector. The state of North Carolina, which is called NCDOR, Department of Revenue, and the IRS or U.S. Treasury for the federal government. You can find the tax people for your city at town hall and usually just ask for the town clerk. County has offices, usually the tax collector's office. North Carolina State, NCDOR, has offices in Raleigh, plus in regional offices all around, and they come to the small business centers on a regular basis to give programs. So your small business center director will know who the best DOR person is in your general area. The IRS, of course, they're the feds. They're out of Washington. They, of course, have offices around the state as well. But just a little advice here. It's perfectly good for you to go to the City Hall and talk to the town clerk about tax issues. And it's perfectly fine for you to either call or visit a tax collector in your county seat. These folks are generally very glad to see you and will go the extra mile to answer your questions and help you. They're very interested in promoting small businesses. The small business is good for counties and cities, and the tax people know it better than anyone else. So if they can help you, they will do it. And it's a lot better to talk and get a good understanding before you get into trouble, before you've spent money that you're going to regret spending. So communication, relationships, very important. Feel good about asking questions here. NC Department of Revenue, same way. Most states, including North Carolina, have specialists to help small business folks in their tax divisions. They have web pages to help you. We'll talk about those a little bit later. Excuse me. I had an allergy jumped on me today. I'm not sure why, but it's here. NCDOR has regional offices in most of the large towns in North Carolina, the larger cities. You can go meet with them there. You can talk with them online. Your bookkeeper, all bookkeepers are used to asking NCDOR questions, and they have a good relationship. I suggest that if it's a complicated issue that you don't want to be identified, you ask your bookkeeper, your accountant, to ask the questions to the agency. Otherwise, you're doing this yourself. But here's an exception. With IRS, Internal Revenue Service, to federal people, I suggest to you that you always have your bookkeeper or your CPA make inquiries seeking information to the feds. They know the right person to call. They will get return calls better. They know how to send an email to the right address and get the answers back without ever involving or using your name. That'll give you a good sense of security and less anxiety, and get the answers that you need and the advice that when the information comes back, you'll probably need the CPA to define it for you and explain it to you. These rules are very complicated. Even the ones from the state are very complicated, but not so much as the feds. So just a piece of advice. If you go to court for any type of situation, you're probably going to want to have a lawyer go with you. When you're going to the IRS, it's just good plan to have a CPA to go with you. Okay, even in minuscule inquiries, in the long term, you will not regret following that. Where can you find folks? North Carolina dealing with sales tax and use tax, they're easy to find, just as I mentioned. In your handout and here on the screen are the phone numbers and addresses, where they're located and how to get in touch with them. And of course, all these agencies have websites. Now, a week ago, one of you asked me some questions that a lot of you have asked me in the last 15 years. Basic questions I've asked myself from time to time. And I determined that I was going to ask my bookkeeper to do some research for me. I paid her to do it, to come up with some answers to questions, that frequently asked questions that y'all have asked a lot. So pay attention here. And remember that these will be on your video tomorrow, and I'll send you a handout by email tomorrow that has all the same information. Talking mainly about new businesses, vendors in particular, especially vendors that are going to different events is what this is centered around. But a lot of the same information applies to everybody. So the question was, when a vendor event or a craft fair is going on, are the vendors required to add or collect or report and pay the North Carolina sales and use taxes? And the answer was a clear yes. Yes. Okay? And we know that a lot of people must not know the answer to this question. If yes, what tax rate should you use? The business address where they're holding the event or is located, or the vendor's address? And the answer was clear. The tax rate that you will charge is for the county that you're located in. Each county will have its own tax rate. Most of counties across North Carolina are somewhere in the 7% range, sales tax, but some are a little lower, some are a little more. So when you're at a vendor event and you're making sales, according to this, you need to keep up with the what sales that you took in, add the certain amount of tax that you added, and keep up with how much you collected, because you're going to need to send that to the state. Are North Carolina vendors required to collect North Carolina sales tax for orders being shipped out of state? The answer was no. But now I'm focusing here, North Carolina sales tax on items going out of state, that's a clear no. Now, when we're referring to these pages, that's a book about these taxes, and I'll give you the link where you can go to this book and see it for yourself or refer to it sometime. But now let's look at this. Are North Carolina vendors required to collect sales tax for other states where they're shipping out their orders to? This is the big question that's plagued entrepreneurs and small businesses in this state and across the nation for years. The unofficial, notice I'm saying unofficial, and I've seen these answers come in from a lot of places that look official, but I can't document it. If you're not selling over $100,000 a year in a particular state, probably not. You don't need to worry about collecting sales tax for that other state. But if you are selling over $100,000 a year in another state, they may come looking for you and require that you reimburse them the sales tax for their state. I've had accountants and bookkeepers tell me this is small potatoes with those tax people. If you're not into big numbers, they're probably never going to mess with you. That's unofficial, okay? The rest of the story is you can find it in the North Carolina website with frequently asked questions. And I'm giving you what it says, where people ask questions and they give answers. And they start out saying, each state has different laws related to this. So it's a complicated thing. And if you are planning on selling more than $100,000 worth of merchandise a year in a particular state, then you might want to talk to your accountant about how to deal with this, okay? Many times these event sales will be less than $75. Is there a minimum sales tax that requires reporting? Clear no. They're saying that you can set your sales tax payments up either quarterly or monthly or paid with free payments, but one way or another, you are supposed to collect the tax and send it to the state. Does North Carolina DOR offer a fact sheet or guidelines related to vendors and sales taxes? Yes. at the website listed here, ncdor.gov, then search for frequently asked questions and then just go forward. Plus, there's a sales tax bulletin book that covers everything, and it's kept up to date, and it's online. On the email and I'll send you, that website for these bulletins is listed there as well, and that's the pages that we refer to. So I really hope this helps you. Now, let's talk about craftsmen that are going to different stores or suppliers and buying items, bringing those items back, putting together in a wreath or pottery or this or that. Does the craftsman have to pay has to charge their customer sales tax on the finished product if they paid sales tax on the materials that they bought? So what would the answer to that be? No. But here's the rest of the story. You can have a certificate that you can show to the people that you're buying your materials from, and they don't have to charge you sales tax, so you can get the stuff tax-free. Or if you have to pay taxes on it, keep up with it and document it, and at the end of the year, you can request a credit or refund on sales taxes that you did pay, that you collected from buyers and paid the sales tax on the retail sales. This is can get complicated for folks that are in the pottery business or wreaths or doing other things. Some just go ahead and pay the sales tax themselves and then charge the customer sales tax as well. You're cheating yourself by doing that, when indeed, if you document and you pay those sales taxes, you can say to the DOR, the taxes have already been paid on these materials. They may, however, there's always a wrinkle, they may, however, say to you, well, whatever the cost above what you paid for it and the value of your labor and marketing, that up part should have been taxable. I heard this argument one time. I don't agree with it, but it's a gray area, and I don't pretend to know the exact answer. I do know, though, that you can buy stuff, do not pay the sales tax on it, or get a tax credit, which puts you right back to the better thing is you go ahead and charge the tax when you sell it to your retail customer, then you're covered. So here is that website that you can go to with all the different detailed information, and it is very complicated, and that's the main reason why I asked my bookkeeper to do this research for us, okay? But it's here for you if you want to do it yourself or share it with your bookkeeper. A lot of different kinds of taxes besides sales taxes, withholding, privileged license, employment and insurance, and different franchises. So taxes cover a lot of area that we just have to deal with. County taxes are kind of a special group. The feds and the state are interested in your taxable income. That's how much profit you're making as a business person, the profit. Therefore, the more deductions you have from that profit, the less taxes you'll pay. One of a good way to get more deductions is through depreciation, as we discussed earlier. County taxes, however, are altogether different. County taxes are based on what you own, what your values are, what your book values are primarily, but maybe in some situations on other items, what the fair market values are. So let's look at some of those different things. In businesses, the county taxes will look at your vehicles, your inventories, your tools, your real estate, leased equipment that you got on board that you're using, and other items. So the county looks at you differently than otherwise, and they're going to tax you based on what you own. The other taxes are based on the profits you make. Inventory we need to talk a little bit about. Indeed, inventory that you're holding for jobs or for this or that or asset items that you belong in inventory is one thing, but inventories that you are holding for sale, items that are for sale, are not taxable. So you wouldn't include that inventory on your county tax return. You always got to remember that. Inventories that are for sale, you don't list as a part of your depreciation sheet there, even though it is a monetary asset that would show up on the fair market value side. The yellow auditors, we all think we hate them. They're bad people. The only time they're going to come around is to cause us stress and look over our shoulder and complain about what we did or didn't do with our bookwork. So generally, everyone don't like the term auditor. But how do we avoid them? First of all, we need to keep our radar on and try to stay off of their screen. The fact of the matter is only 1% of the tax returns are audited, and that's the good news for everybody, but there's no way to guarantee that you and I won't be on one of those that come up just as a random audit when they do come up. But there are some things to keep us off of that screen. So that's what I want to talk about right now. How to keep the red flags off of our returns. One, use experienced, well-known preparers that you trust and you know are good people and doing good jobs. Listen to their recommendations, get testimonials. If you see a sign up in a tax preparer's yard that's guaranteeing you a refund, that's guaranteeing you a large refund, you need to beware. You need to beware, because they don't know if you're qualified for a refund until they examine your information. So be careful for that. Now, at 10 o'clock and 12 o'clock at night on TV, you'll see a whole bunch of commercials that always come up with these people that says, man, tax preparers refunds saved me a ton of money. I owed the government $30,000 and they got it down to reduce to this or that. And so many excuses and sad faces about folks that were in big trouble with the tax folks. And I feel for them. I have empathy for it. But in the back of my mind, I'm saying, I bet your trouble started with a shady tax preparer, and you darn well knew that you weren't supposed to be getting these big refunds that you were getting. But it will always come home at some point in time. So stay away from people that are making you promises that have an odor to them. Your unreported income, if you just keep right on pocketing your money and you're out in the public about it, folks are going to find out. They're going to come and see you. If your income lifestyle is showing that you're making $100,000 a year, but you're reporting that you're only making $5,000 a year, someone's going to call the IRS and report you on you if you're not careful. So unreported income can always backfire on you. Not filing on time year after year after year and without a good excuse generally will create a red flag, and you don't have to explain why you're not filing. So remember, business folks, and I'll talk about this later, business folks usually get an extension because you don't get your information in to do your county taxes until April, but they want you to file your returns in January, so you need an extension there. But other reasons for extension is done year after year after year. As individuals, that's a problem. If your CPA is asking for those extensions, you'll probably be okay. So what are your priorities in your business now? I want us to remember after this 7 weeks together that we've come up with some basic foundation commandments, so to speak. One I want you to remember is, in your business, offer your customers more than take it or leave it. Be in a position that you can negotiate and promote discussion. Remember what the RFC is. In chat, type in what the letters RFC stand for. RFC. So very important. These are the people that come to you and do business. They like you, they love you, they appreciate you, and indeed, they will all go out in the world and tell people they ought to do business with you. Raving fan customers. That's exactly right. Thank you guys for writing that in. The raving fan customer, RFC, is like having a built-in marketing machine, for your business. And you get these raving fan customers by treating them right, seeing they're 100% satisfied, and then asking them the important questions at the magic marketing moment. What did I do right? What did I do wrong? What are you going to buy next and when? Do you know someone that's in the market for shopping? How can I improve my business? When you start getting those answers, and make the changes needed, those raving fan customers will keep you in business. In bad times, And if you have things that people want and things that people need, they will keep coming back to you. You may not have as much business or as good a business as you'd like, but you can stay in business if you've got a good pocket full of raving fan customers. You need to stay in touch with them with your database. A good large database of email addresses of your customers and people that will probably do business with you, that you're constantly sending them promotions about, keeping fresh bait in the water, so important. You want a really good mobile page, a good mobile page that when people look you up on their telephone, the items that they see on your screen representing your company need to look good, and they need to encourage them to press a button and call you right now or to send you a text right now. Your mobile page is what people, it's an introduction to you and your business. So make sure you're paying a lot of attention to that. I want you to have My Business on Google account. Very important. It's the free website for you that really brings customers to you. Very low cost and such as that. Remember your selling pages, your landing pages at your websites and your places where you're on the internet. These pages need to have the look and feel to them, create interest, get people to call you now. Pay attention to them. Testimonials are super important. Let's get those out there so that relieves the anxiety of web shoppers about doing business with you. Add videos every time you get a chance. I've stressed that all the way through the series. It's just as important as it can be. And mainly, be the best person you can be, as we've talked about earlier. Use these 7 words and other things to create magic marketing moments that people know that you're sincere, know that you're dedicated, know you're listening to them, and know you're doing your very best to bring them the best product, and you're willing to talk about it. It's not take it or leave it, but let's talk about how we can make this work for you. Okay, we talked about the taxes and the depreciation and things like that. If there are any questions that you can nail down on your mind now, go ahead and take a moment and type them into the chat board. That way, after our session is over tonight, I'll copy that and I'll send direct answers to you about these tax issues, depreciation, or anything else that we've talked about during the last 6 weeks. If you've got any particular questions or want me to send you study guides, use the chat board to request them and or send me an email, and I'll keep working for you. I'll be glad to. Okay? I'll take just a minute and give you a chance to think about that and see if you have any questions. If there's a whole area of conversation that you wish that I had included in the presentation, either tonight or before in the series, I'd like to know more about this or more about that, this would be a good time for you to type it in. I've got a really good relationship with quite a few of the Small Business Centers directors, and if indeed you have a topic that you would love for them to have a webinar on, I'll be glad to. If it's one that I can give, I'll be glad to offer my services. If it's one that another presenter is already giving, I'll be glad to encourage the directors to add webinars to serve what you're looking for. I want to talk now to you. Thank you all for typing in there. Just go right ahead and doing it. No matter how good your marketing is, Mike or Teresa, Brian or Fidel, no matter how good a job you've done, Pamela, with pricing your products or have it out there, and you may have customers that have been drawn to you through your very good marketing campaign. But at the moment when they come, they look at the product, they like it, they chat with you, all the conditions are right. But even then, a lot of customers will walk away. They just are not ready to make the purchase or just can't bring themselves to do it. And that's why I'm saying that these skills are so important. And we'll touch on, I touched on them last week a little bit about closing the deal and selling. All those factors add up to great, but there's one factor that'll keep people from going away, and that is there's not a salesman in the room. There's not a sales lady here ready to encourage and motivate the customer to go ahead and let's do the deal. And as entrepreneurs and owners of our businesses, if we hadn't gone out and searched and found a sales type person, a people person that knows how to close a sale, then you're missing a big link. You've got a big hole in your boat, and it needs to be filled. The smallest things can make the biggest difference. So I want to share with you some of my observations, and some of them you may say were silly, but I'm bringing them to you because I think they were super important in my observations in my business and doing business with other people through the years. And I know indeed it can make a difference, and it may make a difference for you as well. So I'm not going to start at basic sales 101 or sophomore sales 202, no, or junior sales 303. We're going to the top. We're going to do sales 404 right now. These are the selling secrets and things that most people don't know unless you have experienced it for a lot of years. And I'm happy to share it with you. Part of my advice through the course has been never tell everything you know, right? You don't want your competition to know this, or even your customers sometimes. But I'm paid to tell you what I know when it comes to this, and I'm happy to do it. So pay attention. You may apply this to you, to someone you know. You may offer advice to someone else. So I hope it helps. Welcome to Sales 404. And in selling, there's three words that we're going to remember. If you've ever been to a real estate school, this is the first thing that was said. We got to remember our ABCs. And ABCs means always be closing. Wherever we are, whatever we're doing, we've got our ear, our DNA in our ear tuned in to what can I do to close the deal? Because closing deals means cash flows coming. And as we've said through the course, cash flow is the key thing, but close the deal. Know that there are times to sell and to talk and to listen and to present and to be the expert, to answer the questions, but there's a season that you hush and you close the deal. You stop selling and you start closing. And the faster you're able to get to the understanding of that, the better it is. I was talking to a customer, see his address right here. I was talking to a customer in Wyoming just before we started tonight. And he was telling me this that he needed and that he needed and why with a certain piece of equipment. And he went on and on and on. And I knew I had to talk with you guys in a few minutes. And I was very polite and I'm listening and I said to him, it sounds like to me you're about ready to make a decision. He said, yeah, I think I am. That was a closing signal. I had to pull it out of him. But once he said, yes, I am, I was able to say, well, here's what we need to do. I want to give you all the information you need to make that decision. So go ahead and give me your full name, your email address, and your phone number, and your zip code so I can come up with the freight cost and how soon we can get it to you, different ways you can pay for it, and then we can have a closing conversation after I send you the quote. He said, man, that's great. If you can send all that to me, I won't have to ask you all these questions. So what I was doing was trying to lead him towards a closing. I knew that I couldn't close him on the phone tonight, but I also knew that if I could get him, he was just asking me questions and questions and questions. I knew that if I could get this email to him and answer all these questions frequently asked, that customers do, a good chance of closing the deal. And he really appreciated the fact that he didn't have to go through all these questions, that he really didn't know what he was talking about and feel comfortable. So first of all, you have to build trust. People are not going to buy from you if they don't trust you, especially if you're selling on the internet. You've got to build that trust with performance, professionalism, and references, okay? And videos is an excellent way to get that done. Build trust. A lot of deals are dead on arrival because the salesperson just didn't know a few things. And here are the main things that I say that they just don't know. One, do you enter a customer's office or space when they're talking on the phone with someone and you can hear their conversation? even though they welcome you to come on in or they don't seem to mind hearing you talk, you do not do this. You want to respect their privacy and move away. Get out of earshot and just say, it's okay, give them a thumbs up, it's okay, I'll wait till you finish. They maybe didn't realize it, but they will immediately give you respect that you didn't have before because they see you're professional enough to respect their privacy. It's little things like that that make a big difference. I am just certain that customers don't mind my strong cologne. I mean, my girlfriend likes it. Everybody ought to like it if she does. I know that people don't care if I smoke or not. A lot of people smoke, and so it shouldn't make a difference to anyone if I smoke. And maybe spitting tobacco in the cup, that might turn somebody off, but not my customers here in North Carolina who are used to it. Or I can carry my dog anywhere. There's no problem. Everybody loves my dog. And everybody does love my dog, Otis, but I'm not going to carry him everywhere because there are some people who do not. And I'll tell you right now that no matter how good you think that cologne smells, it will make someone else sick. Because people have allergies now. Just like I've been coughing and sneezing and getting water here. The world is full of allergies. Do not take the chance. Do not soak yourself down with smell-good stuff. Stop smoking around customers. And if you're going to call on customers today, please wear some clothes that you didn't smoke in yesterday, because that smoke odor just follows you around. Now, forgive me if I'm stepping on your toes, smokers, and I know there's a good chance that 25% of you may be avid smokers or sometime. But you just don't realize how bad it smells to non-smokers, to the point to make them sick, and to the point they will not usually say it to you, but will never want to be in the same room with you again. Just that important. If you're going to invite people to ride around with you in your car looking at real estate properties, I suggest that you don't smoke in your car. And I also suggest that when you have this smoke-free car and you have people in it, even your customers, that start lighting up, you ask them to refrain. In today's world, you can ask the customer not to smoke in your car, and indeed, most people, it will be okay. That may be touching around for you, but take it seriously because it is very, very important. I know, and in today's world, I just know that everybody feels the same way that I do about the particular person running for president. And I know that everybody likes the same senator that I like, or mayor, or county commissioner. Wrong. And the nation is split 50-50 on about everything political. So please leave your buttons at home, leave your red hats at home, because half of the people that you talk to in North Carolina do not agree with you. And it's to the point that some people, as much hatred is being spread around by some of the candidates, some people will not agree with you and absolutely take you to task. At least they will not do business with you. When people inquire to you about your politics, you just say, well, I'm giving it serious consideration. Do not put yourself in a position to jeopardize the business that you hope to do because of someone else's radical political views. Now, I've been at it long enough to know that it's true. And I have some really good, long-time friends, devoted Christian friends, that we're on opposite sides of the political fence, but we're still good friends and can still do business because we've learned to respect each other. But you folks that are just getting started and meeting people for the first time, and you say, well, I'm in a community where everybody likes this person, so I'll be safe wearing my hat or this or talking about it. Wrong. Half of the people that you're talking to you will not tell you how they feel about a person, but will really hold it against you if you're preaching for the wrong side. So keep your political feelings to yourself and out of your business if you possibly can. The same types of rules I'd say to anyone that's involved in putting together church services. There's no room, in my opinion, for politics in churches. And there's very little room for politics in business. Now, you may have a personal relationship with an individual, and there's no doubt about it. You handle that the way you want to. But in the general world, in your general marketing and advertising, keep your politics out of your business. Be for America, be for truth, and be for democracy, and you'll be okay. But when you take it beyond that, you'll shaky ground. If a door is open, is it okay for me to go in the office or into a room if the other person is on the telephone? It is not. Even if they're waving for you to come on in and they're on the phone, give them a sign, wait just a minute until they invite you. At first, they're going to be shocked a little bit, but the second thought through their head is, you know, that's quite professional. I appreciate the fact he's giving me my privacy. Just give that some thought. It's being courteous. It is gracious for you not to enter those rooms and invade someone else's conversation. This is a big one. I've been doing business with these people where I feel really good about this quotation. This customer has told me this and they've told me that, and I'm just getting pumped up. I just know I'm going to make this sale. I feel so good about it. I've even spent the money before I've taken it in, thinking about how I'm going to spend it. Bad. And this is a problem that so many young or new entrepreneurs have. You do not count your chickens before they hatch. You cannot take for granted just because you've given a good quote and they give you a good sign that you got it in the bag. You must follow up. You must show them that you are hungry and that you're not taking them for granted. If they act like, what are you worried about, Steve? It's just, hey, man, I got 15 grandchildren. They're all hungry. I need your order to buy them shoes. You know, have some fun with it, but always give that spirit that you're hungry, not that you're desperate. But you're a professional salesperson, and you know, and you didn't even say this. Look, I've been trained that professional salespeople do not take you and other customers for granted. I want this order, and I want to work for it, and I want you to know that. That's a good thing to say. That's not showing anything except professionalism and your ability to talk, to listen to yourself, talk and let them know that you're so serious about it. In today's world, and people give you an opportunity to give a quote, they call you on the phone, leave a message, send you an email or a text, it is an urgent for you. Every new deal must be handled as if it's urgent for you. The customer that called me from Montana wanting a quote, I'll put about an hour's worth of work into preparing his quote and getting him to it. It's not going to be the last thing I do tomorrow. Matter of fact, I may stay up late tonight, as late as midnight, after I finish with the paperwork I do for our program. I may stay up if I'm up to it and go ahead and send this quote out to him tonight. Urgency is important because after he hung up with me on the phone, there's a really good chance he called one of my competitors or several of my competitors and asked for quotes. I know that my competitors mostly are lazy, and they may not get back to him for a week. My quote's going to be on his desk in the morning in Montana when he's drinking his morning coffee. And if he likes what he sees and I'm good enough at it, he will. He'll give me a call, and maybe I'll get an order tomorrow for $7,000 or $8,000. My competitors haven't even sent him the quote yet. Yeah, that's the way it works. There is an urgency to look after your customer. You don't want to leave them hanging. The most response I get to a lot of customers when I answer the phone is, wow, am I talking to a human being? I'm used to leaving messages and hearing menus, and here I am, I'm talking to the president of the company. I am impressed. I hear that many times every day because it appears that a lot of folks that are doing business, they're just happy to let someone leave a message. And I know why, because there's so many spam callers. For every good call I get during the day, I get 5 spam calls. It is just so aggravating, but I pick the phone up. Even if it says spam caller, you know, you can hear that little beep, that little ringing sound for a spam, and then it just hang up on them. But a lot of times it'll say spam caller when it's not, and you can't take the chance that you're throwing a customer call away. Urgent. Answer emails within 24 hours or as fast as you can. And if you get behind, like I do some weekends, I have to, I'll see these emails start stacking up and with parts and other types of orders, and I just can't handle them all in one day. But I will take the time to send them a real fast message. So sorry I can't respond in detail. We're overflowed with incoming work. I usually say we are so blessed with overflowing work, and I'll get to you as soon as I can. That gets you off the hook. And then when you do answer, if you're late, start out with a phrase like this. Please forgive me for being tardy responding to your email. I usually try to answer email as soon as it comes in, but we were blessed with overwhelming requests for quotes today, and I just couldn't do it. Folks will love you for being honest and humble. Don't ever be ashamed of asking for forgiveness. You're going to make mistakes, and the customers will forgive you, but not if you just act like, hey, just ignore this. This is just the way business is today. It's the difference in being a human being and being plugged in and building relationships. So get to them as soon as you can, get the information to them, and don't take anybody for granted. You know this fellow here? Yep, that's the gorilla. That's the gorilla in the jungle. And he makes the rules, and he follows the rules. And in Sales 404, he's the best teacher. Why is that? Because he'll bend a tree over as far as he can without breaking it. He'll do what it takes to get the business. And this is my guerrilla marketing theme that's helped me out through the years so much. And I've got a special study guide on guerrilla marketing. Maybe we can do a webinar on it. But I don't base the guerrilla marketing on talk right now on the most prevalent single issue that helps you close sales when nobody else could. The most prevalent issue that helps you close sales when no one else was able to do it with the customer. First of all, never tell everything you know. Never give the little bits of information away that help you put together a better quote. Well, what you're offering is a happy customer, a happy ending, a complete deal. That's always your main focus, that happy, complete deal. When they ask for details, give them the information in a basic way so that they can't use it to come back or talk with competitors about it. Try not to itemize your quotes in such a way that it helps them ask for discounts or take things in and out. Some of this you have to do, but try to itemize your quotations in the most convenient way, showing things as options this and options that, but leave the real meat and potatoes in your mind and not on the paper for them to use against you. Handle every opportunity to sell to someone as if it's a pitch and a promotion. It's not just general conversation. It's just not passing chit chat. When you have a chance to sell, that always be closing thing needs to be on your mind, and make it a promotion in the way you present it, and then you've got a chance to close the sale. If you're not promoting, there's a good chance they're not buying. And if they're just shopping, when you start promoting, you move them into the buying mode. You want to keep that really good comfort level by not being overbearing or pushy. You're going to be gracious and kind and listening, but you're going to start selling. There's a time to sell, there's a season for selling, and there's a season for closing. You need to know the difference and how to start and stop it. You want to keep in your mind and never tell anyone the names of your vendors or subcontractors, manufacturers, or et cetera, if you don't have to. Even if you use DBAs, I don't want you lying to people, but it's okay to use DBAs here so that they don't have direct influence to pick up the phone or get on the internet and go to your vendor, subcontractor, or manufacturer and buy it direct from them. People do that all the time. I live that life. So you got to control those interests and put your presentations up like a work of art. So very important that you do that. But focusing now on the nitty gritty, we've got down to the person likes the product, they like you, they like everything that's going on, but they like their money more. Even though they got the money or have made the arrangements, they just kind of think, I feel safer with my money in the bank than buying this thing from you. And some people just cannot say, yes, I'll take it. They give you the signs and be there and chit-chat with you, but when it gets right down to the nitty-gritty, there's a good large percentage of people that cannot just say, yes, I'll take it, unless there's a salesman in the room. Some people will fight it so hard and look like this little girl and actually come to tears. And especially if it's a pair of buyers, like a husband and a wife, or a couple of people, and one's not ready and one is, sometimes that other person can have such a bad influence on you, you just aren't going to be able to make the sale unless you learn some secrets. So that's what we want to talk about right now. Number one, as you're coming to the sales table, the bargaining table, the negotiating table, you want your preparation to be king. Your chance to be successful all determines on the preparation and knowledge you have going into the environment. You want your work to be a piece of art to a sales coach. You want it to energize for the moment. You want to show how it changes their environment and the world, and you want to show them all the things that make it so important that they understand this factor or that feature. You want your word to sweep up all the good news and help them to forget all the other outside considerations. Let's say that again. We are going to sweep up this opportunity and hold it and control it so that our customer, the person we're selling to, forgets all their other outside considerations and anxieties. That's what we're after. That's the work of art that you can put to it. Now, there was a fellow that came along back in the early 1800s, F.A. Mesmer. He's a smart fellow. And he came up with some studies that have changed the world then and now. And Mr. Mesmer, Dr. Mesmer, is the place that we found our word mesmerize. And as a public speaker, coach, granddaddy, and father, husband, I know how important mesmerize is, and you do too, whether you've thought about it or not. I like to use the example of my grandson Colin when he was growing up and spend a lot of time with me. I just learned to love watching him in front of the TV, squatted down there watching SpongeBob SquarePants. And Colin could sit in front of that TV and he was just mesmerized. Whatever else was going on in the room didn't make any difference. He was focused on that cartoon show on SpongeBob. Being mesmerized is being spellbound or in a trance or bedazzled or bewitched or hypnotized or captivated. A lot of words here. You're getting the drift here. It is having a focus that you just got to stare. You got to understand. We've seen pictures, have been around people that were just mesmerized by the beauty in their face or their eyes or what they were saying. So very important that we think about that. So when we're selling and we have got down to that moment where it's time to do the deal, we know the selling time is gone and it's time to do the closing. Here's what we got to think about. Remember this mesmerizing is being like on the stage, a drama stage, with everyone centered on bringing your attention to a certain point at a certain moment. It's like being in the church with a really good minister who knows how to prepare and deliver a sermon. He's got the music that's pumping his message. He's got the piano player over there playing soft at certain times. He knows how to do his hand gestures and his gestures and movements in such a way to bring your attention to his face and what he's selling, what he's saying. Just a pro at making the point come across, all in the direction of captivating the moment. And the moment that we're trying to captivate and to recognize is what I call the aha moment. And you'll see this term used around a lot of different ways and places, but I use it when it comes to selling and capturing the moment. Those of us that have been blessed with children and grandchildren and knowing that they're blessed sometimes with colic and other things that keep them up all night, and they just cry and cry and cry and just won't stop, and we rock them and roll them and even carry them out for car and into the car and drive around the block to try to get them to go to sleep, because we know at some point in time they will stop that crying and look up at you, even though they've been crying at the top of their voice, and look up at you and say, take that big breath and exhale. That's the aha moment, because we know that in just a moment they have turned loose of those anxieties or problems and decided to give up and go on to sleep. We're looking for that moment when we're selling. We're looking for that aha moment, that they like the seller, they're trusting your advice. They know they need to buy from you because you have done the selling, you've done the talking, you haven't oversold, they feel good about the price, you've made them comfortable with trust and your reputation and the warranty and the product you're moving. And then you know that you have to release their anxieties long enough to get them to breathe easy. So how do you do that? You do it by lowering your voice, pausing for silence a few seconds. That pause helps them tune into what you're going to say next. And then you bring the closing comments. Look, it's time for us to do this deal. And you're going to start shaking your head and your hands like this. We can do this deal now. Right here is the number. You've got it written down on that well-prepared document. You write that number down, draw a circle around it. You put your initials, say, let me write my initials here, and all I need for you to do is just initial it right there, and we'll move on. They don't have to say yes. And there's a lot of different techniques or terms that you know. You're not tricking a soul. You're just using nonverbal communications and professional sales training to help someone close a deal with you, a win-win deal, without them having to say, yes, I'll take it. Because a lot of people can't do that. But everyone can write their initials beside a number they agree to. And the minute you're able to do that, you want to know that they're buying. They're buying. You have moved from selling to closing the deal. And then, my friends, I'll say congratulations to you. Because when you do that, you're going to be really proud of yourself. But you know what you got to do? You congratulate them on driving you to the toughest bargain you ever bargained at. You congratulate them for being great negotiators and a great trading partner, and hope that they'll do some more business with you so maybe you make some profit on the next deal. In other words, you're congratulating them. That's the message you want them to leave with, to go out and become a raving fan customer and tell other people how great it is to do business with you. Then you'll get more business. That's what raving fan customers do to you. Remember, you're not going to get every deal. You're going to get knocked down 9 out of 10 times to begin with. But get back up, stay in the race, be determined, because that's what it's going to take. So congratulations. You'll win this race by staying in the race and finishing the journey. I know you'll do it. You stayed with me here for 6 or 7 weeks, and I thank you and appreciate you. And I hope I see you for 100 more situations where we all learn together. If you're respecting every person and maintaining high values, earning trust and fostering partnerships, embracing excellence, and be still and know. Be still and know that tune out the garbage, tune out the gibber, focus on the things that count. Be still and know that God can handle everything. And if you ask him, he can help you too, in business and in life. So God bless all of you. I look forward to working with you for many months and weeks and years to come. So I say good night to you. God bless you and your business. And I'm welcoming you all to turn on your mics and let's hear what you got to say. Thank you very much. Thank you for your comments in chat. I'll copy that before I sign off tonight. Mike, I want to congratulate you if you're still on board. I don't see your mic on yet, but I want to congratulate you on being our blue ribbon winner of the most active classmate, and showing us all how get things started. So thank you so much, and congratulations, Steve.
Thanks. Thank you. It's really been a pleasure and valuable to take this class. So I feel very fortunate.
Thank you again, Mike. We look forward to seeing lots of information for you and share it, and we'll pump it on and share it with our friends.
Sounds great.
All righty. All of you that's been in contact with me along the way, it's been a pleasure to work with you, and I hope that you'll keep sending information. Sarita, again, thank you so much. You, again, our senior and most educated member, and thank you for all your help. Looks like we're going to have a lot of certificates to send out in just a week or so. Hey, let me tell you, I need those quizzes returned with your mailing addresses so that we can have a place to know where we mail the certificates to.
Hi, I had a quick question. So the next time you start these workshops, will it be the same homework?
Pretty much. It'd be. I might change a question or two, or just another item, or if there's something on there that you think needs to be changed, let me know about it. We can be very flexible with it.
I think I'm gonna participate in the homework next set of so I can get my certificate.
That'd be great. We look forward to it.
Thank you.
Yes, ma'am.
Good night, Steve. I look forward to your email.
Thank you, Sarita, and I hope you have a great week and we enjoy a little vacation. Of course, you'll be printing up certificates for us, but thank you so much.
You're welcome, Steve. Thank you.
All right. Shauna, glad to have you with us tonight in Avetta. And Dr. Tamara, you got any words of wisdom to share with us?
The Lord is good. I did want to say though, I shared my website with you after our last session because I only knew about the sessions you were teaching about 3 weeks ago, and so I want to say thank you. But also, I want to be sure I have the right email address for you, because I shared it to the Gmail address. But I see that we're receiving things from your AOL email.
I do both places, I sure do. And I will make sure that I respond to you tomorrow when I'm sending you copies and give you all the information you need.
Sounds wonderful. Thank you.
Thank you, too. Bobette, I'm looking forward to reading the email that you sent to me late and responding to that. Okay, everyone, thank you again. It's been a pleasure working with you and for you for the last 7 weeks, and look forward to doing it starting again back up at the 1st of September. Thank you very much. Good night, and God bless you and your family and your business.